Welcome to another episode of Good Value by Antipodes.
Last month, ASR's co-founder and chief investment strategist Ian Harnett shared his views on global equities. And today, I'm delighted to be joined by Nick Nelson, ASR's head of global equity strategy, who is closely following the US election. So if you want to hear a Brit and an Aussie discuss Trump versus Harris, you're in the right place. Welcome, Nick. Great to have you on the podcast.
Thanks very much, Alison. Yes, a Brit and an Aussie to discuss US politics. So here we go. We'll give it a go.
What can go wrong, Nick?
Exactly.
So we're recording our interview around 24 hours after the Trump-Harris debate. Mm-hmm. So tell me, what did you think?
Yeah, well, it was quite a fiery one, wasn't it? So, the key clash points seem to be on immigration, abortion, and even the result of the last election, right? We're looking into 2024, yes. But we're still having a debate and discussion about 2020. And then Ukraine. And I think just taking the sort of the hot take, as they'd say in the US afterwards, it looked like Harris won. So there was a CNN flash poll which had 63% thinking Harris had performed better versus 37% Trump. And obviously that's a very different setup to the last debate against Biden, which of course effectively ejected Biden from the campaign. And I think the betting odds now have Harris maybe 2 or 3 points ahead of Trump when you aggregate the different odds, but it's still super close. So I would say, a small win, I guess, for the Democrats over the Republicans on the debate.
Mm. And I was talking to our team at Antipodes about this podcast and what we want to achieve from it. And look, we could talk all day about politics and personalities, but as investors and for our clients who tune in, we do want to focus on the investment implications. So I certainly want to get your views. But to start with, and it is futile trying to pick a winner, but can you give us a quick overview, big picture policies, the voting landscape and the states to watch? And do we have more states with the potential to swing and impact that final outcome?
Sure. So, look, I think there's obviously broad differences on policy. I think Trump would focus on tax cuts, immigration controls, foreign policy, and clearly tariffs, which we can discuss in detail. Harris is more maybe the continuity candidate to a degree, likely to focus on higher corporate taxes, but also supports in terms of minimum wage, cheaper healthcare, and so on. And look, I think, as you say, the actual process, it is tight. It's tough to pick a winner. If you look at where it's going to come down to, you have these battleground states, and there's maybe 6 or so of these. So Georgia, Nevada, Arizona, Michigan, Wisconsin, maybe even. But I think the key one, looking at where we are now on the polls, is Pennsylvania. So that one is effectively too close to call. The latest poll, which I think was taken 2 days ago, so there's less than 1% between them. So that's effectively, obviously, a margin of error for a poll. And Pennsylvania is 19 votes in the Electoral College. So remember, you need to get to 270 votes in total to become the president. So it's a reasonably large state and relatively important, obviously a big swing state. So I think, as we go through the results coming in, that'll be clearly the key one to watch to see, who actually heads to the White House.
Mm-hmm. And Nick, it's not just all about the presidential election, is it? The composition of Congress is important with regards to how much power the incoming president may have. There are many potential outcomes, so I guess, what do you think is the most likely?
Yes, no, exactly. And you're spot on there because, you could obviously get a president from the Republican or Democrat president who could then be saddled with a setup in Congress, which could be, the other side and quite often is. And you get these kind of this gridlock as you have with policy. So if you look, we have the House of Representatives. Obviously, we're going to see that 100% of those, rotated, as it were, so voted. In the Senate, which is 100 seats, you're going to basically just get a third of those roughly coming up. Now, actually, in there, the Democrats have maybe a bit more to lose than the Republicans. They've got 20 seats up for vote, and the Republicans have just got 11. So for them, it's maybe less to defend, as it were, for the Republicans, and they can obviously go on an attack on the states where Democrat senators are up for re-election. And the one thing I would say, actually, almost irrespective of which way the House of Representatives or the Senate goes, is it feels to us that it's very unlikely anyone would get a supermajority. And what's a supermajority? So supermajority in the Senate of the 100 seats. Obviously, if you've got 51, you have a majority, but you need 60 seats to get a supermajority. And that's important because that stops a filibuster, which is effectively where the opposition could basically, speak out and draw out a bill so you run out of time and can't pass your legislation. So I think, it looks to us most likely to be some form of mixed government, but the key point being unlikely to have either a Republican or Democrat sweep, and in particular, not to get the 60 seats in the Senate.
And just with the Senate and those seats coming up for re-election, and as you said, you've got the Democrats with, you've got 1/3 of the seats coming up for election, but with the Democrats having 20 of those seats and in the position of having relatively more to lose, what is the potential for swinging on those seats? So those seats switching from Democrat to Republican?
Yes, I think it depends, obviously, state by state. And I think it clearly does go in hand, although we're saying it's different to the presidential vote. If you were to have, let's say Trump leading in the polls, 60-40 or 65-35 or something like that, that would maybe give you an idea that of those 20, they could get, 10, 15 or something like that. But I think that's unlikely. And there will be several which will be, locked down and are likely to turn. And I think in reality, because the presidential vote and the popular vote is so close, you're unlikely to see the Republicans stealing significant amounts of those 20.
So just like the outcomes, policy is still remarkably uncertain given the timeline, and you've given us some of the big picture already. And some of the key areas relevant for investors do centre around taxation, climate and trade. So where does each candidate sit on each of the big topics?
Yeah, no, thanks, Alison. That's the good way of splitting it down on those three. And I mean, to take them in the order you highlighted them, I think firstly on tax. So on personal tax and tax more broadly, Trump has said he would continue with his Tax Cuts and Jobs Act, which he put in place when he was President 1.0. And that is supposed to sunset, i.e. kind of fall off the legislation next year. And he said he would continue it. So it does boost consumers in terms of lower taxes, but particularly the high income cohort. And Harris, in contrast, at the personal tax level, has been talking about tax cuts for the middle class and additional help for first time buyers, as it were, in the housing market and those types of areas. On corporate tax, this is where there is quite a big difference, actually, and this is maybe one of the more important differentials between the two. So corporate tax in the US is currently 21%. Trump has said he would take it down to 20% or even 15%. And Kamala Harris has recently repeated the Biden pledge of taking it up to 28%. So, if these were to get to their target rates, you could have a 28% plays 15%, which is a pretty sizable, chunky difference. Yeah, exactly. And now, of course, as we all know, these big multinationals, they have their effective tax rate, which is quite different to what the sticker price is. So there's lots of ways that companies can kind of get around this and shift their earnings from country to country. But nonetheless, as you say, it is a big number. And I think that's the key thing to watch on tax. Secondly, on climate, so our climate macro strategy team at ASR have written on this topic extensively. And the point they've made out is, you go back and you look at Trump's first presidency. So back in 2017, for example, solar was just 3% of US electricity supply. It's now it's in the process of overtaking coal. So we have moved to a different energy mix in the US. And it'll be interesting to see how he or Harris indeed deals with that. And then thirdly, on trade, I mean, obviously we can discuss the tariffs in a bit more detail, but I think both of them are likely to be pretty tough on China in terms of the restrictions we've seen. Obviously, Biden put on over 100% tariffs on EVs coming from China recently. But tariffs are clearly one of the tools that Trump is going to use to affect his his foreign policy, as it were. So those, I think, are the three. And then maybe one, if I could add a fourth one would be immigration. And Trump has talked about deporting up to 15 million undocumented migrants from the US, which is clearly not going to happen. I mean, that number's just a crazily big number. But Harris has also pledged to be tough on the border. So that'll be another point to look at.
So you've raised quite a few bits and pieces there that I'd love to delve into a little further. So maybe we'll start with climate. You know, Trump has indicated that he would repeal the Inflation Reduction Act, the IRA. And given our earlier conversation around the balance of power in Congress and having that mixed government, my first question is that even legally possible? And my second question is, there has been a lot of support for this policy on both sides of the aisle. There have been traditionally Republican states that have really benefited from this program. So the second part of my question is, do you think there's political will?
Yeah. No, there's a good questions to ask. I think on the first one, I think it's going to be very difficult, right? So you'd have to get it through, the House and Senate. As discussed before, it's not clear that they have enough seats and representation there to do that. And I think in reality, it's a chunky piece of legislation which has been in place for some time. So to unravel it would be complex and not easy. And to the second part of the question, which I think kind of informs the first, is I'm not sure it's really in the Republicans' interests. I mean, as you point out, they've actually been big beneficiaries from this. And our climate team wrote on this, and they're estimating that nearly 80% of the investment from the IRA has gone to Republican states. So, for example, think of Texas, clearly a big beneficiary from solar. So that's not an area that necessarily Trump and the Republican base would want to change. What would be easier, though, was to reverse some of Biden's executive orders, so outside of the IRA, on restrictions on, for example, car exhaust emissions, so tailpipe emissions, as they call it in the US. And that would be easier to do, and also to allow more drilling permits in Alaska for oil and gas, and, of course, new LNG export terminals. And so those slightly smaller areas, I think, he would have an easier chance of changing. And some of the market beneficiaries, of course, would be people who are exposed to Alaskan oil drilling or LNG port construction. So those are much more manageable than unpacking the IRA, which I think would be difficult.
Mm-hmm. And on trade, you're right. Those policies that Trump has announced look very aggressive. 60% tariff on Chinese imports and 10% on imports from the rest of the world. So my question to you is, how do you see this playing out? Is there potential retaliation from Europe and China? I mean, it sounds very inflationary. So I'd love to get your thoughts on that.
Yeah, no, it is quite an extreme number, as you say, and our economists were pointing out in a piece they published earlier that if you did do that 60% on China and you did that 10% on everyone else, the blended tariff would put the US tariffs the highest since the 1930s. And there's an estimate from the Pearson Institute saying it could take up to 2% off US GDP. So yes, it would be inflationary. Yes, it would be a dampening on growth. I mean, effectively, it's a kind of tax on the consumer. So we would argue it's unlikely to happen. In fact, one of the themes that our economics team have written on, and one of the views we have at ASR, is we think it could be used as a negotiating tool. So it's almost like the tariffs are a threat to get to an end result that Trump is aiming for. And we think he's wanting to maybe weaken the US dollar. So in a relatively recent Bloomberg Business Week interview, he was talking very much, when they talked about the economy, the first thing he talked about was the dollar, not tariffs. So he thinks the dollar is too strong, and he'd want to see a weaker dollar to allow US companies to be more competitive. So it may be the case we hear the threat of the tariffs, but they don't actually ever get fully imposed, at least not at those levels. And as mentioned, I think it's too damaging to the US economy.
On the weaker US dollar, is it possible for a savings-poor nation with a structurally deteriorating fiscal deficit to run such a policy long-term? When you think about that fiscal deficit, you've got an ageing population and the healthcare costs that will come with that. We've got these potentially unfunded tax cuts that you've already taken us through, and a big pipeline of new public investment spending. And all of this has to be funded. So great to get your thoughts on, as I said, can they run that sort of policy long term?
Yeah, no, it is a good question. And I think, and this is maybe where, having an Aussie and a Brit discussing the US election is actually quite helpful, because I can refer back to Liz Truss, a short-lived Prime Minister in the UK. And if you remember her, disastrous in terms of the impact on the markets, her mini budget from a couple of years back here in the UK, there was a very aggressive fiscal spend with not the books being balanced. It wasn't signed off by the kind of the budget committee, the independent budget sort of oversight committees. And of course, the gilt market, the bond market in the UK sold off dramatically and effectively ejected her from office, really. So the market said no more. And of course, the US, that's not a situation that's happening, despite them running, as you say, correctly, very high fiscal deficit, and under Harris or indeed Trump likely to expand. So I think that, the dollar has this exorbitant privilege, and it's the world's reserve currency. And it gets away with it because it's the US. I mean, the UK is clearly not in the same picture as the US economy. So the scale of the US and the linkages, the sort of world's reserve currency, as it were, allows them to do this. And I think actually the bigger drivers for the dollar, in the near term at least, are likely to be the interest rate differentials between the US rates and Europe and Asia, and also the economic growth differential. So we've seen the dollar weaken a little bit, right, in the last month.
Yeah.
And that's partly because I think, US economic growth relative to Europe is mainly maybe slowing a little bit, just in terms of some of the indicators we look at.
Which is sort of why I am puzzled with that, with those comments around, Trump's comments around wanting a weaker dollar, when you do have this situation where it is the world's reserve currency. Growth is relatively higher. There is a large interest rate differential. And so, that means strong dollar, and then, trying to have a weaker US dollar. So it is quite, yes, I found it really puzzling. So it'll be interesting to see whether he can achieve, or if it's possible for him to achieve that outcome.
Yeah, I mean, it will. And it'll be, of course, the fundamentals of, what's happening with interest rates, as you say. I mean, of course, we're expecting the Fed to engage on a pretty aggressive cutting cycle, which will make them catch up with the ECB to a degree and the Bank of England to a degree and so on.
Okay, Nick, let's bring this back to markets and investment implications. So how do you think the equity and bond markets will respond under each outcome, whether that's the Republican or the Democrat outcome? And love to hear your views on sector winners and losers.
Sure. So I think under Trump, let's say that one first, I think there's a perception, market perception, that could mean a steeper yield curve, so maybe higher inflation, so maybe connected to these tariffs and the fiscal and the tax cuts being extended. So that has one implications for bond markets, as it were. And I think also, as mentioned earlier, the corporate taxes could be quite supportive under Trump relative to a Democrat presidency. And if you're thinking about sectors, one to watch could be banks. So I think under a Trump presidency, there would be less regulation, perhaps. I mean, he'd peeled back some of the post-global financial crisis, post-GFC regulation on banks under Volcker and so on when he was in presidency. So I think that would be one to look out for. Also, as mentioned, some of these oil companies in terms of ones that have access to drilling in Alaska and so on, but that's quite a small subset. And then elsewhere, I think outside of the US, big implications really on, certainly emerging markets, depending on the dollar direction. They're obviously very closely tied to the impact of the dollar. If the dollar was to weaken dramatically, then you'd want to be more bullish on EM equities. And then the third area to look at would be, depending if it's Harris or Trump. If it was Trump, I think it gives a boost to defense spending in Europe because, he's basically suggested he would be withdrawing support or from Ukraine and trying to close that war down very quickly, whereas Harris has suggested they'd be there for as long as needed. So I think that would mean, a big boost to European defence spend, and that's a sector that, we've been constructive on for a couple of years. And interesting, just as a little snippet, I know everyone's fixated on NVIDIA these days, but actually if you go back 2 years, over the last 2 years, there's a German defense company called Rheinmetall, which has actually outperformed NVIDIA in terms of share price performance. So we're all focused on all the cool AI themes, but actually a German munitions and a tank maker has basically been a better performing stock over that period. So I think those are the themes that will cut down depending on whether we have a Trump or Harris presidency.
I think you've just shocked everybody by finding a stock that has performed better than NVIDIA.
I know. It took quite a lot of research.
Yeah, it did. Actually, just sticking with defence, actually, I have a question on that as well. A harder stance on foreign policy and geopolitics, does that... Okay, so that will force Europe to pick up its defence spending, as you just commented. Mm-hmm. But given that all of the Eurozone is already up against their fiscal limits, to what extent does this restrict Europe's ability to undertake big spending projects like we're seeing in the US to energise their economies?
That's a really interesting question, and we've had this report from Mario Draghi that came out, ex-ECB head, of course, this week to the EU in terms of recommendations on investment. They're saying that the EU is way behind the US, well, the UK is as well, in terms of investment, and it needs to improve that to get higher trend growth, and that involves more spending. So there's definitely questions and pressures on this, and it could be seen that maybe to get round some of these restrictions on budget constraints and rules and regulations, there could be a special expenditure on Ukraine. And I think, there's certainly, if you look at the political will across Europe, particularly if the US withdrew their financial support, I think there would be political will for that. So maybe a way of kind of bending the rules a little bit to get that aid to Ukraine, and even maybe at some point some borrowing to invest, which would be positive for Europe.
Okay, so to summarise your winners and losers, you're saying steeper yield curve particularly under Trump, higher inflation, the fiscal deficit and the tax cuts. You think certainly banks with less regulation under a Trump presidency. Definitely there could be some winners and losers within the oil space, potential winners and losers there. EU defence spending, and also potentially, if we do see that weaker dollar, positive for EM. So that's the summary. And sector winners and losers under a Harris presidency. You sort of talk through your Trump outcomes.
Yeah, so
would they look different under Harris?
They would, and I guess it's kind of almost the reverse. I mean, as mentioned, she's sort of the continuity candidate in the sense of not personally connecting her to Biden, but obviously being the vice president and being part of the administration and so on, and having voted on a lot of the policy that Biden's pushed through. So I think you would have to say you wouldn't have that defence theme in Europe because it seems that she's said she's committed to supporting Ukraine. You wouldn't have you'd probably be maybe expecting maybe a little bit tougher regulation on banks, or at least not a loosening. And then I suppose you would maybe think that you would get potentially more legislation that's more friendly on EVs. We've already got a lot of that in place within the IRA, but it could be the case that there's more maybe tax breaks, more additional supports for that. And housing, she seems very keen to get, as I was mentioning, first-time buyers with these tax breaks onto the housing ladder. So that might invigorate the US housing in terms of demand, at least, which could be helpful.
Is there one candidate, I guess this is probably a bit, putting you on the spot here, is there one candidate who you think will be better for the performance of US stocks in 2025?
That is a difficult question. Because I think without the classic strategist answer of it depends, because it does depend on
yes.
What happens with the Congress, as we were chatting about earlier. But I think, it's tough. I mean, maybe the knee-jerk reaction, maybe Trump because of the corporate taxes, if I had to drill onto one specific theme, and maybe, the extension of the Tax Cuts and Jobs Act, the TCJA, and particularly obviously for the higher income households, and they're supporting their consumption, which, may not be good for the broader economy and may not be good for, your spread of wealth, clearly, it might nonetheless be supportive. So I at a margin, if it was a spot, you put me on the spot,
yes,
which you have, and don't have to go for one or the other, I think I'd probably marginally say Trump because of corporate tax cuts and regulation on banks.
Final question. From an economic perspective, could it simply not matter who is in power? That the forces driving the deficit and inflation are just more structural going forward?
I think that's a very good question to end on, because there are obviously lots of micro areas that we talked about, be it regulation, be it Alaskan oil drilling permits. But in reality, if we think about the macro cycle, the US economy is slowing. The Fed's about to embark on maybe up to 200 basis points type rate cutting cycle, if you believe the futures markets. And we're right at that pivot point. The fiscal is immensely expanded already, as you pointed out correctly. So in a way, I think the broader macro drivers are likely to be more important, particularly because it's not clear to us that you get clean sweeps. Of course, you could on the day, just because the mathematics is quite tight, but in reality, it seems unlikely, and therefore it's not as if either of them would have the mandate to be able to push through super aggressive policy changes. So I would argue it's important for individual sectors, it's important at the margin, but in reality, if you had to ask me, what's more important, Fed policy or Harris Trump on the 12-month view, I'd probably say Fed policy.
Fed policy. Mm-hmm. Nick, thank you for your time and sharing your views. It was an absolute pleasure having you on the podcast.
Yeah, great to chat to you. Thanks, Alison.
The content in this podcast is general information only. It is not advice of any kind and doesn't take into account your personal financial situation, objectives, or needs. You should seek professional advice before making any financial decisions. Stock commentary is illustrative only and not a recommendation to buy, hold, or sell any security.